and the opportunities and the private credit um, um, market across the Caribbean is looking very healthy and very strong. We have a very healthy pipeline. I think in Jamaica alone, we have about 75 million. And across the region, we're looking at about 150 million in pipeline. So what we really need now is we need additional dry powder to take advantage of these opportunities that these yields, because we don't think that this high interest rate environment is going to last beyond, let's say, next year, December. That's I guess our core view. So we really want to lock in some of these high yields. Our average tenor 1.7 years versus 1.73. And dry powder on the balance sheet was 2.6 million versus 5.9 million last year. And we also had, but this on balance sheet dry powder does not include 2.7 million in undrawn credit facilities. We would have redeployed some of the exits that would have had during the quarter, and of course would have also, for revolving credit facilities, paid down some of those facilities, and then we'll redraw from those to deploy into new portfolio opportunities as we put them on the book, rather than hold the cash on our balance sheet with the negative carry on it. Of course, we would have advanced our discussions with our international financial partners in pursuit of 100 million in credit facilities. We are currently speaking with two institutions in particular, and we are at various stages of due diligence. So that process continues, and we hope that at some point in early 2024 we can get to a more conclusive partners. But we continue to pursue those, and of course everyone by now would know that we spoke about a pref share offer, public preference share offer, that would be launched in post the end of the financial quarter, and this was launched a couple of days ago, and we expect it to open on November 20th, and this is for 20 million USD and 800 million Jamaican dollars. And I have a slide at the end that will give some additional data on that. I'm pausing here for a second, right? Just to again recognize Acquisition Financial Corporation in Puerto Rico. Of course, Puerto Rico is a US territory, it's a 100 billion economy. And just to congratulate the Acquisition team for 20 years of exceptional performance. They have done an average 70 transactions every single year, on average. They have 42 cities that they have impacted across Puerto Rico, covering 15 multiple industries, and 7% of their deals are actually focused on women-owned businesses, which is actually a sustainable development goal. And I'll go into a little bit more into Acquisition's sustainable development, Acquisition's impact investment strategies and themes as an introduction to overall Sygnus credit investments, adapting and aligning itself with the United Nations Sustainable Development Goals in 2024, and we start reporting those metrics on a go-forward basis. So you can look out for that in other quarters, and later on in the slide I have a couple slides on what Puerto Rico has done. So just recognizing the Acquisition and Acquisition team, I think the acquisition was fantastic, and the team continues to create substantial value that will continue to be unlocked for shareholders. And in terms of what Acquisition did during the quarter, they achieved a very important milestone. Since the acquisition in February 2022, they have actually deployed just a little over 100 million US dollars. So February 2022 to September 2023, that's less than call it a year and a half, and they have deployed 100 million US dollars. So hats off to the team again for a fantastic job. Actually, for the calendar year 2023, from January to September, they have actually originated 72.6 million US dollars, which is just incredible. So they're basically growing in terms of origination and deployment of capital at a faster rate than SCI itself. So this again ties into the theme as to why SCI would have gone and done the acquisition, and of course would have reported before that SCI now has a 95% stake in Accusent, having increased its stake during the June quarter from 93.7 to 95%. So private credit portfolio at the end of the quarter, 79.2 million. Of course, I should hasten to mention that would have completed the integration of the company effective July 1, end of June, effective July 1, which now means that the company is just a pure private credit investment vehicle with a very clean private credit balance sheet, and so there are no employees or any operations inside Accusent anymore. So we expect to reap the SCI should reap those benefits over time on a go forward basis. Accusent actually did 17.1 million in deployment during the September quarter, and if you compare that with what SCI did, right, I think we did 7 point something. So they deployed at twice the rate of SCI, again in keeping with the theme why SCI went and did the acquisition in the first place. The yields just north of 11%, and the investment tenors just less than 2 years. Next. In terms of risk management, non-performing investment ratio was 1% versus 1.6% in the same period last year. Stage 3 assets remained at 2 facilities, which are one of them is in bankruptcy, and the other one we are moving against the collateral. As I would have presented last time, we have had no charge-offs during the quarter. So we remain below our non-performing investment ratio of 5%. Of course, just to provide an update on the Cayman Islands hospitality asset, there are no new developments there. That remains, in bankruptcy, and there are no developments in terms of a timeline for the sale of the asset, or any proposals coming from anyone to buy the asset as of yet. In terms of the Jamaican stage 3 asset that we have in the hospitality sector, this is public knowledge, so the courts would have made a ruling for the sale to proceed, and so we continue to work with our legal team and with our workout team to pursue the full recovery of our investment. And as I said before, that's something that we continue to work on, and whenever we have any firm news to speak to, we will obviously update shareholders via either a press release and or during an earnings call. Final asset that we have is a mining and quarrying asset that is in stage 3. We are going after that collateral, and whenever we have additional update on that, we will provide that to shareholders. So no major changes occurred in the quarter per se. We promised last time to continue showing you, I guess, just the tracking of our expected credit loss charge as a percentage of the private credit portfolio. And this is what the chart looks like historically. You can see that the September quarter remained pretty much flat relative to the June quarter, after having a movement from 0.2% to 0.8% at the end of the financial year. So we continue to just provide this trajectory so that shareholders, prospective investors, etc., can see how we are trending in terms of what are the actual charge on the balance sheet versus the size of the private credit portfolio. Of course, this is very important, and we watch this like a hawk every day. Next. I'm not going to spend too much time here. The portfolio allocation by industry, the diversification, 23 industries. I guess the biggest highlight there is that if you're looking from over the last 4 quarters, the financial exposure to financial industry would have increased from 14% to 26.3%, while hospitality would have been reduced from 13.1 to 9.7%. So those are two of the major highlights. Of course, when you exclude the underlying Puerto Rico portfolio, SCI is diversified across 13 different industries, with financial being the largest, followed by fast food and infrastructure. And if you consolidate and include the accent portfolio, then it's 23 industries, with financial being at 26.3 being the largest, construction 11.7, second largest, and manufacturing at 11.3, third largest. And construction industry in Puerto Rico is actually booming. The economy has about 50 billion US dollars in federal government allocated spending. Most of that is geared towards reconstruction activities. And Puerto Rico came out of bankruptcy in 2022, March 2022, in fact, basically a month after we did the acquisition. And so the vast majority of this money hasn't been spent yet and probably won't be spent for another 5 years. So the runway and the trajectory for reconstruction and deployment of capital into hard assets in Puerto Rico has a very, very long runway. And so obviously the Accent team is taking advantage of that by being one of the leaders who is actually pushing and deploying capital and being very innovative, financing some transactions on the market that actually is unlocking value for entrepreneurs and businesses right across the multiple cities in Puerto Rico. Next. By region, a lot of things there. Of course, this will move up and down based on when where we are exiting assets. You can see that Bahamas would have moved from 10.7 over the last 4 quarters down to 7.7. That's one of the an asset class that would have exited from. But you can see that overall Puerto Rico remains top of the allocation of Puerto Rico remains top of the chart with 35.9% coming from 30.9% 4 quarters ago. Next. So there's a quick introduction to UN Sustainable Development Goals, which is also referred to as SDG. There are 17 of them. I'm not going to read them out, right? But these are the 17 Sustainable Development Goals, which was adopted by all the UN member states in 2015. And it's basically just presenting a blueprint for us to align our investment strategy and our investment theme and deploying capital in a manner where the planet can survive, and it's not just for today but for the people and the children of tomorrow, and to reduce poverty and inequality, etc. So we are going to start representing our portfolio to say, based on these development goals, our themes, how is our portfolio allocated? And Puerto Rico has actually done a fantastic job of this. If you flip to the next slide, they actually have been doing specific impact investing over the past 5 years. They actually have 3 different dedicated impact funds, which we'll get into other in upcoming quarters, right? But you can see that they have deployed capital 205 million to SDG number 9, 100 million to SDG number 3, 35.5 million to sustainable cities and communities, etc. So they have done a fantastic job over the last 5 years investing capital, targeting sustainable development goals in dedicated impact investing vehicles. And Puerto Rico will be launching, what I should say is that SCI will be sponsoring a new impact investing vehicle in Puerto Rico over the next coming months. In keeping with this theme of driving the Puerto Rico business. So we are going to be going all in terms of investing in a socially responsible way, and ensuring that our capital is actually making a difference in the world that we live in. The next slide actually shows you what Accrescent has done year to date in terms of capital that is deployed. And you will notice effectively that pretty much 100% of the capital that Accrescent deploys is actually can be allocated in an impact team, right? Which is exceptional. So again, hats off to the Puerto Rico team and a fantastic 20th anniversary and an excellent job of being one of the few and first Caribbean teams to be actually doing dedicated impact fund investment, where the capital being deployed is actually being measured and quantified, and there are investors deploying capital specifically to get exposure to this impact team. So again, hats off to them. And of course, SCI will be following suit and will be showing you our impact alignment the next time we meet. Next. So just to give you an update on our outlook, of course, we remain laser focused on enhancing shareholder value. Spoke about integration already, which is complete. We're now scaling the business, and I spoke about the new funding PR that's going to be launched, sponsored by SCI. In terms of strategic growth path, we remain firmly on track to participate in $1 billion in private credit transactions across the region. And of course, part of this thrust will be to launch new investment vehicles, to have SCI sponsor the launch of new investment vehicles, and we'll provide more updates on that. We also have 75 million in pipeline opportunities in Jamaica, and of course, the pref share that was launched earlier this week is geared towards deploying capital to fund some of that pipeline. Over the medium term, some of that pipeline will also have to be funded by other capital that we are working on to come from our international financing partners. And of course, the growth in core revenues, the double-digit return on ROE, and the 20% annual growth on EPS, all of those remain in progress, and we continue to push towards that. And of course, also pushing the dividend yield up above 5% in steady state. We also are focused on that, and of course, part of that would have been, you would have seen where we would have paid our record dividend in our post the end of the quarter, which was announced in the quarter. I spoke about the financing credit facilities and the pressure already, so skip that. And I already spoke about the impact investing strategy and the information. I just gave you the introduction, the very short and dirty version to our impact investing themes. And of course, we'll have a formal rollout in 2024. And as far as the buyback, we did not buy back any shares in the quarter, but nothing has changed about the buyback plan. It's still a 3-year plan, began June 2023, and therefore the expiration will be on or before June 2026. And there's no change to our buyback strategy. Of course, we will buy back shares as the opportunity provides. Next. Final slide is just to, I guess it's a plug. Of course, everyone should visit the Jamaica Stock Exchange or Sygnus Group's website for the full prospectus, consult your broker. This is not a solicitation. I'm simply providing information on what the preference share, which is a public offer, is. The offer opens on November 20th, expected to close on December 6th. There are 3 classes of shares. 2 of them are USD, Class E, US shares. The price per share, $10. The dividend yield, 8.5%, and that's for a term of 3 years. And there's 10 million of programs there. Class D, price per share, same 10 US. The dividend yield on this one is 8%, and the term is for 2 years, same 10 million US in terms of dollar value that's available. And then class E, the price per share is $100 Jamaican. This is a Jamaican dollar share class. The dividend yield is 10.5% per annum. The term is for 2 years, and 800 million Jamaican dollars is what's being raised there. And of course, Sygnus Capital is the lead arranger, and the co-arranger and lead broker is JMB Securities Limited. And there may be some selling agents, and you can contact your individual broker to get additional information and the merits are the merits of this preference share offer. And with that, I will close off and take questions.
Yes, Jason, thank you for that very informative presentation, giving us additional insight into SCI. We now jump directly into our Q&A section of the presentation. But first, remind persons that the recording will be available on the Sygnus website as well as on our page on YouTube. And of course, this is to be listened along with the financials that are published both on our website and on JSC, the Jamaica Stock Exchange. So the first question for you, Jason, is what is an ideal exposure or portfolio weighting to the hospitality related businesses, and is a drop in the hospitality segment a conscious decision, or is it due to the fact that we're focused on other areas?
So very good observation and good question. Thank you for that. So I mean, it depends on where we are in the market cycle, right? So there's no blanket. I should have an exposure of 15 or 20% to hospitality per se. It depends on where you are in the market cycle. That's how we look at all of the industries. Depending on where you are in the market cycle. So our thesis really and truly is that and so well, that's one, and two, it also depends on what segment of the hospitality we're speaking about. So there are multiple segments of hospitality. The area that we really like are the areas in adventure tourism. We like that area a lot. Of course, we have multiple exposures there. One of them actually would have gone bad during COVID, but the other one would have done phenomenally well. And that's the area that we really are gung ho on, because we think that's a tremendous area for growth. But to answer the question directly, we think anywhere from I would say 10 to 20%, depending on where we are in the market cycle, would be appropriate. Obviously, we want to be up towards a higher range when the market size, when we think that the market cycle is in a boom phase, and more towards the lower end when we think that there may be some slowdown that's coming. Of course, the allocation that you saw wasn't really any indication of us having any reticence about deploying capital at this time in the industry. As we would have highlighted, we would have exited 4 different investments during the quarter, which means that basically they came up for maturity, or our client prepay. So that's what would have kind of resulted in the reduction in the allocation. So it wasn't, for example, us saying we want to reduce exposure per se. We think that the industry at this moment in time is doing quite well and will continue to do well. And especially for Jamaican exposures, I think that with the Jamaican economy, which we view as one of the beacons in the Caribbean, given its debt ratio, a couple of years ago it was 145%. Well, not a decade ago, 145%. Debt to GDP is now, in the 70s, and the credit rating is now BB minus, and I fully expect that Jamaica's credit rating is headed higher over the next 2 to 3 years. And therefore, from that perspective, one would want to plant themselves from now or before now in various sectors in Jamaica, including the hospitality sector, because we think that this will the Jamaican economy itself will perform and withstand any potential challenges that may be coming because of a slowdown due to higher rates, etc. So that's how I view. Hope I answer the questions that was specifically asked.
Thank you for that, Jason. The other question is, I know that the expense ratio is within range, but is there a target for, let's say, the next 5 years to drive towards a ratio of 2% or so?
Well, so good question. So expense ratio. So there are two expense ratios. So there's a so is it okay? So expense meaning is that the efficiency ratio or management expense ratio? So let me take both of them. So we already have targets for both. The efficiency ratio, the target for it is for us to be less than 40%. And we were currently at 67%. And I explained that the main reason for that, I mean, the company did, had a great financial quarter. It's just that the market multiple that we have to use to for the price to book would have affected one line item, and then that obviously fed into the efficiency ratio and pushed it out of work. So we expect that will come back within line period. I can't say when because I'm not sure when market multiples may adjust back. And the management expense ratio side, our target threshold is 2.85%. And as you can see by the chart, we are within that. And so over the next 5 years, we expect to remain within that 2.85% threshold limit. And for the efficiency, we expect to be within that 40%. Based on the dynamics and changes in markets and so forth, if in the future we need to make adjustments to those, of course, we'll have to go and get approval from the board of SCI and declare that to shareholders in any event. But for now, we are maintaining those threshold limits. I hope that those were the expense ratio that were being mentioned in the question. If not, you can rephrase the question and answer it a different way.
Okay, Jason, we'll look out for that response. In the meantime, the next question is, the top 10 shareholders reduced their holdings by just over 13%, right? Since the last quarter. Does this in any way defeat the objective of the share buyback program?
So good observation. I mean, by and large, the top 10 shareholders are institutional investors and pension funds. You do have some fund management companies that from time to time may make adjustment to their allocation by either buying or selling based on what their target objectives are. Certainly doesn't defeat share buyback. Remember that the objective of the share buyback is to enhance shareholder returns, and those meaning shareholders who are holding the stock, right? And so, if top 10 shareholders wish to sell me their shares at substantial price below book value, for example, I will buy it all day, every day, man, because this means that the shareholders who are holding onto their shares, they'll benefit from me buying the shares at substantial price below book value, because the dividends that they'll get in their hand will increase per share, and the earnings per share will also increase. So we intend to use the share buyback to enhance shareholder value as the opportunity arises, and our top 10 shareholders have remained pretty loyal and constant ever since SCI actually launched. And as everyone can see, the top 10 shareholders are actually institutional investors, which is a great amount of confidence in SCI, the private credit company, and the private credit thesis that SCI has. So I don't think that it defeats the purpose. What I would say is that from time to time, those investors may have different objectives and may change their allocation, depending on what their objectives are within whether medium term or short term objectives.
Yes, thank you for that, Jason. The next question is, could you just give us a quick update around the share buyback? What's the current status of the
Oh,
share buyback program?
So the status I mentioned that earlier is the status of the program. It remains as it was. We would have bought made the first set of buybacks in the just concluded financial year, right before the end of the June quarter. We have not made any additional buyback since then, and nothing has changed. We will buy back shares when we when we are so inclined to do. So that's it. Nothing has changed. The share buyback is there. It's a 3-year program, and you know we will buy back the shares as the opportunity arises to do so. Yeah.
Yes. All right. So this is a 2-part question. So I'll give you the first question, and then we can jump into the second one. Can you provide some color on your pipeline and the anticipated outcomes over the next 12 months, considering the prevailing market consensus that we're currently going through a slowdown?
Okay, so good observation and good question. So let me set a backdrop for you, right? So I think in 2020 and 2021, we would have been very clear in our earnings call and in the annual report as well. People can flip back to it. And we basically made a statement, which basically was saying that during any kind of market upheaval or uncertain financial market conditions, that is when private credit companies thrive. And that's because we deploy flexible capital, right? And so and that's also the time when companies that are properly run need to utilize flexible capital as a source of financing, because during those times, traditional sources of finance will normally dry up. And that's the reason why an alternative company like SCI needs to have a lot of dry powder on hand during these type of periods to take advantage of the opportunities. Having said that, our pipeline over the next, I wouldn't say 12 months, right? Because to be honest, we don't do pipelines for 12 months. That's too long. Our pipeline is normally, 3 to 5 months, which is the visibility that we have that to say, okay, this transaction will actually become live. So our 3 to 5 or 3 to 6 month type pipelines for Jamaica is about 75 million. And I'm focusing on Jamaica because it's one of the largest regions that we deploy capital into. And the pref share is actually geared towards those opportunities. Outside of the, and so within the English-speaking Caribbean, English and Dutch-speaking Caribbean, we have another, I would say, 75 million minimum. And I'm using this minimum because, to be honest, the pipeline is substantially bigger than that. But some of these transactions are slated to come on or become reality later on. So we don't have a pipeline a challenge. We don't have a growth challenge in deploying capital. What we have at the moment is that we need more dry powder to actually fulfill or to go and what did I say? We go and pursue certain pipeline opportunities, because we don't want to go and pursue a pipeline opportunity and don't have the dry powder to finance it, right? So we are basically trying to time ramping up the pipeline with ramp up of dry powder to actually deploy into those opportunities. In Puerto Rican markets, I mean, you saw the numbers, man. They just did deployed. They actually originated a little over 20 million during the quarter and deployed 17 million of that. So they have some unfunded amounts remaining to do, which they would have closed or closing post the quarter, right? So Puerto Rico's origination pipeline whatever I tell you for SCI, right? Their pipeline is bigger. It's bigger than SCI's pipeline. Don't want to get too much, give away too much information for that. But the Puerto Rican pipeline is substantial. So if you combine SCI's English and Dutch speaking Caribbean pipeline and add that to Puerto Rican pipeline, you're talking several hundred million. And I'm not even speaking about dedicated um, country, how should I say this? Dedicated country vehicles that we are looking at, right? Which is there are some territories that require a dedicated vehicle. So in the same way how you have Puerto Rico as a dedicated vehicle, right, by itself, there are countries that require that same level of dedication from SCI, and we're working on those. So that those pipeline aren't included, and those capital will come from within those countries. So the pipeline and opportunities are great. What we need is dry powder to actually fulfill that, and that's the reason why we are in the first instance. Before we had the press share, would have entered negotiation with international financing partners, and these discussions obviously takes quite some time because for all intents and purposes, the SCI is still a young company. It's only 6.5, 7 years old. It hasn't been around the block that long. So we continue to work through those discussions and due diligence, and also for the Jamaican market, launch a pref share. So that's the color that I can give you on the pipeline, which is pretty strong. I would say that we have to be, I don't want to say turn away transactions, but we have to be managing our pipeline, because the pipeline opportunities are substantially larger than the pool of capital that we have.
Yes, thank you for that, Jason. I think you would have just answered this question, but you may want to offer additional insight. Are you expecting any additional pressure from the Puerto Rican credit investment income over the short term?
Okay, so I thank you for that question. I wouldn't term it as pressure, right? Because it's just what would I say? It's an accounting metric, which obviously based on where markets go up and down, that's what you have to do, right? But the business itself is making more money, right? So if nothing, so if the PBs remain stable right here, we would expect some reversal of what we would have seen. The prices of the market multiples that we are using have actually increased since the end of the quarter, because inflation data came out since, which caused interest rates to come down substantially, right, and cause asset prices to go up dramatically. Well, in some instances, dramatically. So as I'm speaking to you now, obviously, the adjustment would go in the opposite direction, but I can't say for sure, because you could end up in December and let's say something could happen with the war or what, I don't know, right? But what I can say, over let's say the next 2 quarters or so, I would expect reversal of that number, because based on the underlying performance of the companies that the benchmark, the price to book benchmark are using against, all of those companies have actually reported record profits, and therefore and have announced record dividends, and therefore their book values would have gone up, right? And therefore the PB should go up. Only way it remains low or continues going down is if there's some adverse market movement again with interest rates. I'll also say that because we are using 2 years worth of observation, and it's daily observation, then as you go through time, so for example, if you roll off a period, when a quarter when the PBs were high, and then you get to a quarter where the PBs were low, then obviously that will also affect the overall 2-year price to book. So, I mean, I'm not concerned about it, to be honest. I'm not in the least concerned. The business for me, had a very good quarter where the core line items, which is net interest income and fee income, would have done very well, and the Puerto Rico business would have also done quite well during the quarter, improving its book value and earning a decent amount of profit. So I'm not concerned about the core of the business. Obviously, you know, the net profit figure being reported is affected by what I just mentioned about the price of book. But over the over the next couple of quarters, I would expect a normalization or a reversal in the opposite direction, especially if the Fed, if inflation rates actually peter out and bets for the Fed come off the table, then I would expect that you would see a turnaround and I see where the market start to price Fed rate cuts for June, July of next year. I'm not necessarily in that camp. I think that rates are just going to kind of remain on hold. And then maybe we get to the last quarter, that's when the rate cuts are going to come. But we'll see.
Okay. Thank you for that, Jason. All right. So the next question, was there any decision around the fair value or discussion around the fair value loss that we would have had on the Q1 financial, and how do you propose it being managed going forward?
Good observation, good question. So there's no discussion. Oh, they're asking if I discussed it in the earnings call. So let me okay. So let me just. I'm not sure what is being asked about. Any discussion was had. So let me repeat what I said in case the person actually missed it. So what I said was that we have the price to book multiple that we are using to generate the value that SCI is getting from Accrescent Financial Corporation, given that it's not fully consolidated into the financial statement. We take the book value of the Puerto Rico asset, which would have actually gone up, but then you have to adjust it by a price to book. And that price to book is you're looking at the price to book this end of this quarter versus what it was at the end of the financial year. And obviously, if the price to book fall, then you have to register a loss. So that's what occurred. In terms of how I manage it, there's nothing for me to do. It depends on what the market does, right? But what I'm saying is that I'm not concerned about this, what I would call a short-term fall in the price of book. Primarily because when I look at the underlying, the assets that are in the benchmark, all of them, because rates are up and they're all private credit investment companies, they're all registering record net investment income, record profit. They're all delivering record dividends and actually special dividends as well. So nothing is wrong with them. Their book value is going up. It's just that if the price of the assets fall because markets fall in general because of a hawkish Fed, meaning the Fed saying it expect interest rates remain higher for longer, and people sell off those shares because of that, then that drops it down. The reverse occurs, of course, when inflation data comes out and that normalizes it. So there's nothing for me to manage. It's just you know, that's the valuation metrics that we have to use, which was vetted by our auditors and our consultants. So as I said, I expect that over time, over the next couple of quarters, if not by the end December quarter, that this will reverse itself or stabilize.
Yes, thanks for that, Jason. The next question, in your opinion, what is the best multiple to be used to value the shares? And based on your belief, do you think that the shares are currently under or overpriced?
Okay, so I assume that multiple to value the shares is speaking about SCI publicly listed shares, right? Best multiple? Setting me up, man. Well, good question. Well, one thing I know for sure is that SCI is trading below its book value. No, right? So if the company is trading below its book value, now certainly at the very minimum, right, it should be trading at a premium to its book value. Why? Simply because the company is 7 years old, man. It's very young. The runway ahead of it is very, very big, right? We're talking about the opportunity in the Caribbean. We're talking about at least $2 to $3 billion private credit market, at least, right? SCI at the moment has 162 million on its balance sheet, and if you take the private credit portfolio combined, is 200 million US. So if you know try if you propel that out on a trajectory, you see that over time, SCI is absolutely going to target somewhere north of, or let me not say north of what, that the growth SCI, so SCI can continue doubling its private credit portfolio every couple of years, right? There's no doubt. I mean, the Puerto Rico business was just reorganized and integrated fully just a couple months ago, just 4 months ago, right? That business is looking to really ramp up what it's doing in Puerto Rico. There are growth opportunities beyond the Puerto Rico markets. I mean, I don't like to kind of like, mention these things before there are concrete plans in place, but I'm just trying to lay the groundwork to say within the English speaking Caribbean, there is the opportunity to grow this business, double this current size of the book, right? And then in Puerto Rico alone, clearly at $79 million AU portfolio size, that can double pretty much multiple times, right? Because you're talking about $100 billion economy. So if you put all of those things into the frame and say that, okay, during the first 5 years, SCI was laying the groundwork, and then we had 2 years lost to COVID for a company that's 7 years old, clearly it has a very long runway ahead of it. And so I would say that this, my personal opinion, and I'm a shareholder, clearly the price that the company is trading at is, I guess, is based on short-term conditions and so forth and so on. But there's no way it should be at minimum it should be trading at its book value. But I think that it should be traded at a premium to the book value. As to what that is, should it be 1.2, 1.3, 1.1, 1.5? Man, I'm not gonna speculate as to what it is, right? I don't want to become a stock analyst, right? My job is just to focus on ensuring that the company delivers value for shareholders in terms of its earnings and dividends and return on equity and business strategy, etc. And I leave the market to determine what multiple they want to use to value the company. But that's how I have to look at it from an honest point of view. But my hope is that one day people will want SCI shares to buy and they can't get it. That's my hope as a shareholder, selfishly.
Yes, thank you for that, Jason. The other question, can you just offer some clarity on exactly what is the NPL ratio?
Oh, so non-performing investment ratio is simply the value of the non-performing investment that we have on the balance sheet divided by the amortizing private credit companies. So if I have $100 invested in amortizing companies, and $2 worth of those companies are at stage 3, then they get classified as non-performing, and then that $2 over 100 give you the ratio. So that's what it is. So it's akin to how you would have a bank having a non-performing loan book, a non-performing loan ratio.
Yes. Yes, thank you for that, Jason. The next question is regarding SCI's brand. Now, with
SCI is what? SCI is
brand,
what?
brand,
Okay, Brad. Yes, yes, yes.
yes. So with Ocean's Edge in the news, do you foresee this affecting SCI's brand?
Well, I mean, Ocean's Edge is an asset that a different company, Sygnus Real Estate Finance, has invested in as a debt as a debt investor. Sygnus Credit Investment Limited is a private credit company. Obviously, the name Sygnus is a brand, and anything that Sygnus does, obviously, people are gonna look at it and say, okay, that's Sygnus, that's Sygnus. But it's very clear, or it should be very clear, that Sygnus Credit Investments Limited is a private credit company. It is focused. It has 150 different underlying investments. So even though all of those investments are concentrated in private credit assets, it's very diversified by industry and by region, and it has paid out very consistent dividends, whether rain is falling, sun is shining, or COVID lockdown the country, right? So it has its own quote unquote brand identity as SCI, and it has done an acquisition in a US economy, and it's looking to do a lot of things in terms of its expansion plans. So yes, there may be you know little dribbles of the fact that okay, this is Sygnus and that is Sygnus, but SCI is a brand in of itself, and we have worked very hard to build SCI the brand and to show investors what SCI the brand has done. And SCI has actually delivered to ordinary shareholders, $11.9 million in cash. That's just under just over 1.5 billion Jamaican dollars in hard cold cash that has been returned to investors. And then in terms of bonds that SCI would have issued and preference shares and the dividends and the coupons that SCI would have paid on those, that's also hard cold cash. So I think that SCI's brand won't be hurt by anything that happens with that asset. SCI for me stands out on its own in terms of what the business is about, and what its strategy is, and what the future of the business is, and the growth path that it's on. So and there are going to be quite a number of announcements, etc., that will come due over the next couple of months that will, shine a additional positive light on SCI. So I'm not concerned about that taking away any shine from SCI. To be honest, they're two completely different things. Yeah, that's how I look at it.
Yes, thank you for that, Jason. Final question here. Given the possibility of a recession, what risk management decisions would be taken if the delinquency or non-performing assets were to rise?
Good question. And the short answer to it is the same one, that similar process that we did during COVID, which is, and we do this every day. So effectively, it's two prong, right? So we have regular meetings and discussions with all the portfolio companies. We have annual reviews of portfolio companies. We have quarterly, we have monthly meetings. We are looking at the entire portfolio, the entire book. We are looking at the performance, the financial performance of portfolio companies, because we receive their in-house financial statements on a quarterly basis. We are checking covenants. We are visiting companies, visiting sites, speaking with management on a frequent basis. So, I mean, it's not like if a recession comes, we are going to run and jump and do something. We are constantly monitoring and looking at the various portfolio companies to ascertain what risk may arise if let's say a recession were to come or a slowdown were to come, which industry will get impacted hardest, what's our overall exposure to different industries, where do we want to position ourselves, and perhaps most importantly, what assistance, right, will portfolio companies require, and um, are the principals of these companies able to provide that assistance? Does SCI want to provide that assistance? Many of our invest portfolio companies, which is something that benefited us during COVID, are what you call sponsored portfolio companies, which mean they are sometimes part of a group or a large group, or they have shareholders with deep pockets, so to speak. And what this does, and or they are lead, and many of these are also leaders in their respective industries. And what this does is that whenever you have slowdown or market disruption, if you're a leader in your industry, naturally what's going to happen, you're going to be looking to do an acquisition and double up the weaker participant in your industry. And for that, you need capital, and we are here to provide that capital, which we did during COVID. Um, if you are a sponsored portfolio company, then that means that there's a buffer that will be there, where the sponsor will, because they believe in the business, will be taking action to protect that business, and we will be there by the side of the sponsor to provide whatever support that they need. Because that is what companies with flexible capital do. That's what SCI exists to do. Private credit actually, you know, was given birth in 1984 in the US, out of a weak economic environment when banks couldn't actually provide financing to middle market companies. That's how private credit actually originated as business development companies, and effectively, to provide a different form of capital that is more flexible than normal bank financing, which is always amortizing and is more than likely going to be kind of a black box financing. We start with a blank sheet of paper and try to solve the problem for the client, which is why we are able to charge a higher rate for the innovative financing solution that we can provide. So if a recession comes, we don't really fear recessions. We have been planning for it. We just went through the biggest recession you could ever have, which is COVID. And obviously, we have all our lessons learned from the COVID era. But as well, final point on that is that the balance sheet of SCI, which I brought up earlier, SCI is only levered 1.09 times. That's a very, very low leverage. So what this tells you is that from a capital buffer perspective, SCI is able to withstand substantial movement in economic conditions, because we don't have 10 times and 8 times and 9 times leverage. We have less than more, effectively 1 time leverage. So the business is structured to withstand shocks by having a lowly levered balance sheet in the first place, and in the second place, we have to continue monitoring and meeting and discussing with our partners, which are the portfolio companies, to ensure that we understand what's happening with them, and to ensure that they have their plans in place, in their contingency plans in place in case the environment turns sour. And that's a constant revolving process that takes place effectively every month, every quarter, every year, every day. So it's not like you turn on something that you do because you hear that recession is coming. It's something that you have to do every day.
Yes, thank you. Thank you for that, Jason. Thank you for that very informative presentation and navigating the questions being posed. To end on a high note, Jason, is there anything, on the top of your mind, or anything you would like to add, just to, as final points to imprint on the minds of, the persons on the call, so that they have further insight into SCI?
Well, just to rehash, I guess a couple of points is that SCI is on a path, a particular path where we are trying to scale the business, right? And we're scaling the business through multiple channels. You have the Puerto Rico leg of the business, and then you have the English and Dutch Caribbean speaking leg of the business. And maybe over the coming calendar year, 2024, we may have another another business to speak about, right? Because we're working on that. So, this business is, the company is just 7 years old. It's very young, and the runway and the path ahead of it is very big, right? Obviously, there are going to be ups and downs in business. Sometimes, one quarter you report some results, and the market conditions, or it might be something that go bad in a quarter, right? But that does not detract from the longer term trajectory and the path that we are on, because this business came about as an idea on a sheet of paper, and from 16 million US dollars in capital, in the initial capital that was raised, more majority of it from pension funds. It now has over $200 million in a private credit portfolio. So what I would say is that the path that SCI is on, I'm very excited about the opportunities that lie in front of us. I'm very excited about the impending partnerships that we have already started and advanced discussions on, and hopefully we can get those partnerships cemented so that we can actually stop speaking about them in code and speak to shareholders about them in reality. Hopefully that will happen sooner rather than later, but the process is the process. And final point is this pref share, which is focused on primarily focused on the Jamaican opportunities, to help Jamaican entrepreneurs who are seeing very strong growth opportunities in the Jamaican market, and who need flexible capital at this time, given how high interest rates are, and the structuring solution that we bring and we provide to the table. I would say that SCI has actually impacted the financial landscape across the region by being the number one provider of alternative financing solutions to companies that need it. And we have been quite successful at getting back capital which we have returned to shareholders as dividend, and on a go forward basis we hope to also return some of that benefit to shareholders by executing share buybacks to enhance the value for those shareholders you made. So I just want to end on that note to say that we are here to stay, and looking forward to the opening of the preference share offer next week, which we hope will go very well.
Yes, thank you for that, Jason. We now move to the end of our earnings call presentation, and would like to thank Jason Morris, the Chief Investment Officer at Sygnus Capital, for his presentation, and of course responding to the questions that were posed. And we'll also like to thank all those who participated on this earnings call and were listening in to the presentation and responses from Jason. And last but not least, would again like to remind persons that earnings call will be available on the Sygnus website and also on YouTube. Thank you all for attending, and have a good day. Bye.